Hi, I'm Garrett Nelson, Senior Equity Analyst with CFRA, and I've prepared a brief slideshow on the launch of the Walmart Plus subscription service, which debuted in mid-September 2020, and what that might mean for the U.S. grocery industry and U.S. retail as a whole. I'm calling this presentation The Emergence of Walmart Plus and a New Normal for the U.S. grocery market. I hope you find it helpful. We currently have a strong buy opinion and 12-month price target of $170 on the stock. Here's a timeline of some of the factors which have driven an acceleration of revenue and earnings growth for Walmart and other big box retailers in 2020. If we rewind back to March, that's when the pandemic hit, and immediately there was a surge of pantry stockpiling. That's when we saw the toilet paper and hand sanitizer shortages of canned goods, and so forth. Then came a period where consumers made fewer trips to the store, but also purchased much larger than normal basket sizes on each trip. And they really picked up a lot of market share during that period from non-essential businesses, particularly small businesses and mall-based retailers. Then the stimulus and supplemental unemployment checks got sent out, which put a lot more cash in consumers' pockets, much of which they end up spending. And we'll see, Walmart and other big box retailers such as Costco and Target really capitalized on the surge in e-commerce sales because they started investing very heavily in e-commerce and supply chain years earlier. Here's a revenue and earnings snapshot for Walmart. Walmart has three business segments: Walmart US, Walmart International, and Sam's Club in order of size. But Walmart US is by far the largest, accounting for 66% of the company's total net sales and 85% of its operating income last fiscal year. And if you look at the breakdown of net sales for that segment, groceries accounted for 56% of net sales. So we can say that, no pun intended, groceries are Walmart's bread and butter. And if you compare that to Target, for example, which is much more of a general merchandise play, food and beverage items account for only about 20% of Target's net sales. This slide shows the amount of money that Walmart has invested in developing their e-commerce and supply chain capabilities over the last several years. And it shows that Walmart has increased its e-commerce CapEx for 6 consecutive years. And e-commerce spend as a percentage of their total annual CapEx has gone from 19% in fiscal 2014 to 53% in fiscal 2020, which is just astounding. And I think that's really a testament to the commitment of Walmart CEO Doug McMillon in recognizing the competitive threat that Amazon and e-commerce in general pose to its brick and mortar store model. And he took action to evolve into more of an omni-channel retailer starting several years ago. And that has really paid off in 2020, as you can see in this next slide. The chart on the left shows the e-commerce sales growth of the Walmart US segment, which really took off earlier this year when the pandemic hit, and even more so in Q2, which was the first full quarter of the COVID effect, if you will. And those massive e-commerce sales growth numbers have been the primary driver of the much stronger than normal same-store sales growth shown in the chart on the right, because same-store sales include e-commerce, which is just how retailers calculate it. This slide shows North America's top retailers of food and consumables. And Walmart, as you can see, is the largest grocer by a wide margin. Grocery accounted for about 56% of net sales for the Walmart US segment last year, as I mentioned, or over $190 billion. But if you add Sam's Club's grocery sales, which totaled $35 billion last year, that brings Walmart's grocery sales to over $225 billion. And that doesn't even count Walmart Canada or Walmart Mexico and Central America, which also make the top 25 list in the table shown here. So that really gives a sense of how dominant Walmart is in the grocery industry. And Walmart's e-commerce sales have grown dramatically in recent years, which we think has mostly been driven by curbside pickup, but we think will really shift quite dramatically going forward with Walmart Plus home delivery, which we think will revolutionize the way millions of people buy the groceries. This slide shows U.S. grocery sales, which totaled about $1.02 trillion last year, as well as what percentage of those sales are e-commerce. E-commerce is still a relatively new phenomenon when it comes to groceries for several reasons, and I'll get to that in a minute. But what this shows is that grocery e-commerce really accelerated this year due to the pandemic and is expected to grow by 200% from a 3.4% market share in 2019 to a 10.2% share in 2020. That share is expected to grow to 21.5% in 2025. And you can see how these forecasts change from before COVID, which is represented by the blue line, and the new estimates accounting for COVID shown by the orange line. And this COVID-related grocery e-commerce boom should stick because people simply love the convenience of both curbside pickup and home delivery. In fact, 90% of online grocery shoppers say they plan to continue buying their groceries online post-pandemic. We think Walmart Plus could be a U.S. grocery game changer because of the grocery e-commerce dominance and the fact it really plays to Walmart's competitive strengths. An amazing statistic is that over 90% of the U.S. population lives within 10 miles of a Walmart. And that's just so important when we're talking about grocery home delivery because speed and refrigeration capacity are essential when we're talking about milk, ice cream, produce, and other perishables. And that's just something Amazon doesn't have right now. They have the massive distribution centers. They have roughly 500 Whole Foods stores, but that's less than a tenth of the number of Walmart stores when you include Sam's Club in the United States. Here's the list of initial member benefits included with a Walmart Plus subscription, which Walmart says will grow over time. And moving on to the next slide, early indications show that the new service has been very well received by consumers since the September 15th launch. In fact, less than 2 weeks after Walmart Plus launched, a consumer survey firm called PeopleSay conducted a survey of over 20,000 Americans about Walmart Plus. And here's what it showed, which was staggering from my perspective. 11% of those surveyed said they had already subscribed, and another 27% said they had heard of the service and were considering subscribing. These results implied that about 14 million households subscribed in the first 2 weeks, and about another 36 million were considering subscribing, adding up to nearly 50 million households. If you compare that to the number of Amazon Prime members, that totaled about 124 million in the US at the end of last year. So it's a very impressive level of traction that they've had so far with Walmart Plus. And the survey showed that the unlimited free delivery feature was the most popular with consumers. So if Walmart wins from this new service, who loses? And the answer is pretty much all of its competitors. Membership clubs such as Costco and BJ's, because those are subscription businesses, and consumers might decide they just don't need Walmart Plus and a Costco membership, particularly given the fact Walmart Plus also offers fuel discounts, which are so very popular at membership clubs. And also, we think Walmart is going to leverage Sam's Club for home delivery of the large bulk products that are so popular at the membership clubs. Next, we think all other grocers lose, particularly the smaller ones with little or no omni-channel capabilities, as the value proposition of Walmart's everyday low prices plus home delivery is very difficult to compete with. In fact, it could be devastating for a lot of grocers if a lot of consumers migrate away from them toward Walmart Plus, because grocery margins are already notoriously razor thin. Then finally, We think general merchandisers will also lose market share as consumers take advantage of the free same-day delivery of non-grocery items as well, which is exactly what Walmart wants to happen, I would add, because non-grocery products generally have much higher margins. So that's a threat to small businesses, department stores, mall-based retailers, as well as general merchandisers, such as Target and Amazon. That said, none of these outtakes are to downplay the competitive threat we think Amazon presents to Walmart and big box retail, because they have something these retailers don't, and that's AWS, Amazon Web Services, which generates much higher margins and is growing faster than their own e-commerce business. If you look at the AWS segment, its operating margins were about 26% last year, which is way above Amazon's retail business. North American retail operating margins were about 4%, which was also about what Walmart's operating margins were in fiscal 2020. So we think Amazon could essentially use AWS to subsidize the e-commerce side of the business and really expand their grocery delivery footprint if they wanted to. But for now, Amazon appears to be more focused on Prime Now grocery delivery and more of a urban and suburban footprint. So these are my thoughts on Walmart Plus, and I hope you found them useful. You can read more in the thematic report that we published in late November. And for more information, you can reach out to us at the phone number and email address shown on these last couple slides. Thanks very much, everyone.